Welcome back from the break. Before we went for the commercial break, we looked at how to prepare a payroll for an organization where the allowances given are taxable. We are going to look at how we can prepare the payroll for an organization where the allowances given are non-taxable. So, I will leave the question on your screens for just some few seconds as you go through. Then we can start to prepare the payroll for an organization where allowances given are non-taxable. I hope you've gone through the question and you are ready to answer them. So this time round, we are looking at how we will prepare the payroll for an organization where the allowances given them are non-taxable. There are different treatments of when the allowances are taxable and when the allowances are non-taxable. The first illustration we look at was taxable. All the allowances and the bonus given was taxable. But this time around, we are looking at when the allowances given is non-taxable. So let's look at the illustration on our screens. The information below relates to the earnings of 4 employees of Exams Enterprise for the month of April 2001. We have the employees as AC, Abena Amil, and then Yaya. Then the number of hours worked per each employee have been stated. That is 315, 380, 450, and then 400 respectively. Then the rate per hour is also 380, 380, 500, and then 500 respectively. We go further. We have been given additional information. A non-taxable rent allowance enjoyed by all employees is 10% of basic earnings. We have the social security contribution is 5% for all employees. Health insurance is 10,000 per employee. This is not subject to tax. Abla and Yaya belong to the senior staff club and pay monthly dues of 20,000 each. Let's look at the requirements of the question. Income tax is 7.5% for all earnings above 100,000, 10% for all earnings above 200,000, and then 12% for all earnings above 300,000. You are required to prepare a payroll showing I, the basic earnings, II, taxable earnings, III, total deductions, and IV, the net earnings. So, if you are ready, I am definitely ready for you. So, we have to prepare the payroll for Exams Enterprise. The name of the organization is Exams Enterprise, as stated on your screens. So, always remember to state the company's or organization name and the month you are preparing the payroll sheet for. So we have Exams Limited, we have Exams Enterprise. We have payroll for the month. Okay, so we indicate the names of the employees, as in the workers. The first is AC. Then we have Abena, Amel, and then Yaya. So we state the names there. Abena, Amel, and Yaya. Okay, so these are the workers of the organization. We state their basic wage. You have basic wage or pay. And the basic pay from our first illustration, we say is the number of hours worked multiplied by the rate. Depending on the question, sometimes you are given the unit produced and you have to multiply it by the rate per unit produced. Sometimes too, you are supposed to use the guaranteed minimum rate to calculate for the basic wage of the employee. But per our question for tonight, we are basing on the number of hours worked by each employee. So AC worked 315 hours and the rate is 380. So we multiply 315 by 380 to arrive at his basic pay. So 315 multiplied by 380 giving us 119,700. So we have 119,700. So I'll be solving for the first two employees just to demonstrate how we can prepare the payroll for the organization. Then I'll leave the last two for you so that we can work fast and answer a lot of questions. So Abna also worked for 380 hours and the rate was 380. So we multiply 380 by 380, giving us 114,440. So we have 144,400. Now we go to the non-taxable rent allowance enjoyed by all employees is 10%. So we look for the non-taxable rent allowance, which is 10% of all earnings of the employee. So let's indicate rent allowance. Which is 10%. So we have 119,700 times 10%, giving us 11,970. And then Abna is 144,400 times 10%, giving us 14,440. SSF is 5% of the basic pay. We are bringing SSF here because we don't need the gross pay. Why? Because we are not going to calculate our income tax based on the gross pay, because the rent allowance stated here is non-taxable. So even if we add the rent allowance to the basic pay to give us the gross pay, we are going to subtract the SSF from the basic wage of the employee. So we go straight to the SSF and state the SSF given to each of the employees. And as I mentioned earlier, SSF is always calculated on the basic pay of the employee unless the question tells you to calculate it on the gross pay. So we are going to calculate 5% on each of the employee's basic wage that has been given. So we have AC basic wage as 119,700 multiplied by 5%, giving us 5985. And then for Abna, whose basic wage is 144,400 multiplied by 5%, giving us 7220. All right. Then we have health insurance, which is also a deduction but is not subject to tax. So we have to deduct it from our basic pay before we can calculate tax on the basic wage of the employee. Health insurance is a deduction, but once it's not subject to tax, it has to be taken from the basic wage of the employee before we can calculate the taxable income. So we have health insurance, which was stated as 10,000 per employee. You can see it on our screens indicated there. Health insurance is 10,000 per each employee. So we just indicate 10,000. You have 10,000 for each employee. Then now we can calculate for the taxable income. You have the taxable income. And the taxable income is the basic wage less all the non-taxable items. So SSF is non-taxable, and then health insurance is also non-taxable. We have to less them from the basic wage to get the taxable income, that is the part of our basic wage that is subject to tax. As I mentioned earlier, we didn't show the gross wage because the rent allowance is non-taxable. So if I even add the basic wage to the rent allowance and get the gross pay, I'm not going to charge the income tax on the gross pay. I'm still going to charge the income tax on the basic wage because the rent allowance that will sum up to the gross pay is not subject to tax. So we are taking our SSF and then our health insurance all from the basic wage to arrive at the taxable income. So we have 119,700 less SSF of 5,985. Then we less the health insurance of 10,000, giving us a taxable income of 103. $103,715. Then we go to Abna. Abna basic wage is 144,400. We less the SSF of 7,220. Then we less the health insurance of 10,000, giving us a taxable income of 127,180. The next item on the payroll is to look at the income tax. Right now we know the taxable income, that is the part of the basic wage that is subject to tax. So we are supposed to calculate the income tax on our taxable income, not on the gross. So let's look at the clause given for calculation of income tax. Per the first question we solved, we were given a straight or a flat rate for calculating income tax. But with this, we have been given a clause of which we have to go by. So we will have to go and calculate our income tax, then we add it all and then show it on the payroll table. Income tax is 7.5% for all earnings above 100,000. 10% for all earnings above 200,000, and then 12% for all earnings above 300,000. The earnings is not the basic earnings, but that part of your earnings that is subject to tax, that is your taxable income. So let's look at how we can calculate income tax. So we have calculation of income tax. So we know the taxable earnings of each employee. We have the taxable earning. Taxable earnings. As we have been solving for only the first two employees, I will demonstrate for only the first two employees. Then in your free time, you can do the remaining workers or employees. So the taxable earning for AC, we have AC here, and then Abena. The taxable earning of AC, is 103,715. So we quickly indicate that 103,715. And then the taxable earnings for Abena is 127,180. 127,180. So these are the taxable earnings. So the clause is saying earnings above 100,000. So meaning the first 100,000 of the taxable earning is tax free. So I indicate 0. We don't pay tax on it. So we are supposed to less the 100,000 from it, and we are left with what? 3715. So let me put, when we less the 100,000 from this, we are left with 27,180. So the next 100,000 that is earnings above 100,000. I'm sure when we're looking at the labor remuneration, you remember the payment by result have 3 different methods. We have the straight piece rate, the differential piece rate, and then the guaranteed minimum hourly rate. This, when we are calculating income tax using the differential method, as in if you produce from 1 to 50, you have a different rate. Above 50 also have a different rate. That's the same rules we are applying per the calculation of income tax. So the first 100 is tax free. We are not supposed to pay any tax on it. So we less this 100,000 from the 103,715, and we are left with 375. This 375 is earnings above 100,000. So let's look at the clause again. The clause says 7.5% for all earnings above 100,000. So the 3,715 left is earnings above 100,000, which will be equal to the 3715 multiplied by 7.5%. So we have 3715 multiplied by 7.5%, giving us income tax of 278.625. So our income tax is 278.625. And then when we take the next 100 for Abner, that is 27,000. So we have 27,180 multiplied by 7.5%. So we have 7.5%. Giving us income tax of 2,038.5. So we quickly transfer it to our table. We go on a commercial break, and when we return, we will continue and look at how we can prepare the payroll for exams enterprise. So welcome back from the break. Before we went on the commercial break, we were calculating the income tax of the employee. And for AC, we had 279, and then for Abner, we had 2,039. Now we look at the staff dues. We said Abner and Yaya belong to the senior staff club and pay a monthly dues of 20,000. So only Abner and Yaya contribute to the senior staff, and they pay a monthly dues of 20,000 each. So we indicate that, meaning HC doesn't contribute to the staff dues, but Abner does contribute 20,000 at the end of the month. When you are solving for the remaining ones, you indicate the one for Yaya. Then we have the total deductions, which is a summation of all the deductions that have been made. That is the SSF, the health insurance, the income tax, and then the staff dues. These are the deductions that were made. So we sum it all up to give us the total deduction. So let's look at Abner. SSF is 5,985 plus health insurance of 10,000 plus the income tax of 279 plus the staff dues, of which he doesn't contribute, so there is nothing for AC. So we sum it up to give us a total deduction of 16,264. And then for Abner, her total deduction is the SSF of 7,220 plus health insurance of 10,000 plus the income tax of 2,039 plus the staff dues contribution of 20,000, giving us total deduction of 39,000 259. Now, how do we get the net pay for each of the employees? As indicated earlier, we didn't add the basic wage and the rent allowance to get our gross pay because we wouldn't have taken the SSF from the gross pay. But before we can get the net pay of the employee, we have to add the basic wage and the rent allowance together. Then we less the total deductions from it. So the basic pay for AC is 119,700 plus the rent allowance of 11,970. Then we less the total deductions of 16,264. We have 16,000. We less 16,264, giving us a net pay of 115,406. Then for Abena, her basic pay is 114,400 plus the rent allowance of 14,440, giving us a gross of 158,840. So we less the total deduction of 39,259. Giving us the net pay as 119,581 as the net pay. So this is how we prepare the payroll for an organization where allowances are non-taxable. When they are non-taxable, we don't add the basic to the rent allowance because we are going to do all the deductions, so the income tax is going to be calculated on our basic pay direct because the allowances given are non-taxable. I will leave the questions on the screen and allow you to prepare for Ami and Yaya in the next 10 minutes. You are supposed to do that, and when you are done, I will compare your answers to mine. But before I go, when we return back, you can call in with your questions and suggestions on 030-2211-698, 030-2211-698, or 030-2211-699, 030-2211-699. That is, you call in when we return from the break, when you are done solving for Ami and Yaya. You can also follow us on Facebook at Joy Learning TV, at Joy Learning TV on Facebook. On IG is Joy_Learning TV, and on Twitter is at Joy Learning TV. We go on a commercial break, and when we return, you call in with your suggestions and questions. Make sure you complete the table for Ami and Yaya. So I'll leave the questions on the screen for you whilst you go through. And so, welcome back from the break. I believe you have been able to go through the questions successfully and you have prepared the income for Amel and Yaya. If you were able to solve it, then this is how your payroll should look like. For AC, Abna, Amel, and then Yaya, you can see their basic pay, their corresponding rent allowance, the Social Security Fund health insurance, taxable earnings, the income tax for each employee, the staff dues, the total deductions, and the net pay. So before we went on the commercial break, we were looking at how we can prepare the payroll for employees where allowances given are non-taxable. And with that, we take the SSF and the health insurance, which are not subject to tax, from the basic pay direct. And then when we have to look for the net pay, we have to add the basic pay and the rent allowance, and then we take the total deductions from the gross pay to give us the net pay. So I believe we all have a solution like this in our notes, and you've been able to do it. I say kudos. I know you are ready for your examination. Before we continue, you can call in with any question or suggestion on 030-2211-698 or 030-2211-699. I take the lines again. 030-2211-698 or 030-2211-699. You can also follow us live on Facebook, where you can leave your comment at Joy Learning TV on Facebook, at Joy Learning TV. On IG is Joy_Learning TV, and then on Twitter it is at Joy Learning TV. So this is where we will end with the solution. I believe we have all completed it. So then now we will look at likely examination questions with regards to the topics we had today. Today we've been looking at accounting for labor, where we take major look at payroll accounting. So we are looking at some questions that can be asked during your WASSCE examination. Distinguish between wages and salaries. Wages are paid to workers per hour or daily. The salaries are paid at a fixed rate at the end of the month. Those who receive their salaries are paid, or they receive it at the end of a particular period or month. But the wages is based on hour or units produced for a specific time. So it can just be hours or a day. Then we have described 3 methods of payment by results and state 2 advantages of remunerating workers by results. Describe 3 methods of payment by results and state 2 advantages of remunerating workers by results. So the 3 methods of payment by results. The first one, we have the straight piece rate. Under the straight piece rate, workers are paid at an agreed rate, that is the flat rate, regardless of the number of units they produce. When we talk about payment by results, we are referring to the piece rate method of labor remuneration, where workers are paid based on their output or units produced or by their results. So the first one is straight piece rate, where workers are paid at a flat rate regardless or irrespective of the amount of units produced. So if Kwadwo produced 100 and Ama produced 200, we are all going to be paid at a flat rate of, let's say, 50 cedis, irrespective of the quantity we have both produced. It doesn't mean if Ama produced 200, because the unit produced is higher than Kwadwo's own, he is going to take a higher rate. No, with a straight piece rate, they are all paid at a flat rate, irrespective of the units produced. The second method under the payment by result is the differential piece rate. Under the differential piece rate, workers are paid at different progressive levels. So as you produce more, there is a different rate that is assigned for the unit that you have produced. So at different progressive levels, different rates are being paid. So for example, we can say if you produce from 0 to 50, you are going to be given a rate of 10, and from 51 to 70, you are going to receive a rate of 30. This encourages workers to produce more output. So the differential piecework is based on different outputs at different progressive levels. And the last method under the payment by result is the guarantee minimum hourly rate. With the guarantee minimum hourly rate, an organization sets a minimum rate of which an employee time rate is compared to the unit produced. So through no fault of workers, they go to work and probably they are not able to work, the minimum rate is supposed to be paid to the employee. But if he goes and he produces more than the minimum rate that have been set by the organization, the employee is paid the number of units based on the number of units he or she produced. You can still call in with your questions or suggestions, and then the answers you produce when you were given the question with on 030 2211 698 0302211 698 or 0302211 699 0302211 698. Then we have stage 2, advantages and disadvantages of the piece rate method of remuneration. Stage 2, advantages and disadvantages of the piece rate method of labor remuneration. So when you are asked this, some of the solution or the answers you can give is the advantages. It encourages workers to produce more, because as and when I produce more, I'm able to get a higher rate. And workers can also calculate their own wage at the end of the day, because if I know the rate at the end of the day, I can be able to calculate my basic wage. The disadvantage also include people rush in producing more, leading to wastage of materials. Because they want to produce more at the end of the day, they waste the materials. Shabby work can also be produced, as in the quality may not be to standard. Because they are in a hurry to produce more, to earn more at the end of the day, they end up producing shabby goods, and then more supervision is also required as per the piece rate method of labor remuneration. We have explained the following in labor remuneration. Explain the following in labor remuneration. We have premium bonus, day rate, and then overtime premium. Premium bonus, day rate, and overtime premium. When you meet this in your WASI, you are expected to explain the premium bonus, where workers are paid based on the time saved. It is the amount of money paid to workers based on the time they saved in producing a unit of product. The premium bonus, we have bonus and premium bonus. Premium bonus is the amount of money paid based on the time saved by the employee in producing a unit or working. Then the day rate is also another name for the time rate method of labor remuneration, where workers are paid based on the time they spend on the job. The day rate is the method of labor remuneration where workers are paid based on the time they spend on the job. Overtime premium. There is a difference between overtime and then overtime premium. Overtime is the extra hours an employee stay on the job to work, and the overtime premium is the amount of money paid to an employee over and above the normal basic pay he or she receives That is the amount he received based on the extra hours he or she worked. The B aspect is asking us to state two circumstances under which the day rate is suitable. We have circumstances or situations where the day rate is used, where the workers' union insists that the day rate method should be used, where the worker is an apprentice, where output is not required or output cannot be measured. These are some of the circumstances at which the day rate method can be used. Where the work done cannot be measured, that is, we are only looking at the time the person spends on the job. You cannot measure the work the person has done at the end of the day. Where the worker is an apprentice, and where worker union also insists that the day rate method should be used to calculate the basic pay of an employee. Then we have labor turnover. Labor turnover. What is labor turnover? Also examinable question under labor. When we talk about labor turnover, it is the rate at which employees leave their job and they are being replaced. The rate at which employees leave their job and they are being replaced. State 4 causes of labor turnover. What are some of the causes that will make an employee leave his or her job? We have 1, by retirement. When someone retires, definitely we need to replace the person. By death, some of them we cannot do away, we cannot avoid them. When the person have to retire, we cannot avoid it. When there is death, we cannot avoid it. So these two cannot be avoided. And we have the working conditions. If the working conditions are not favorable to the worker, he or she can leave the job to a better place. And when there are rivalry in the organization, employees are fighting among themselves, or the supervisors or the superiors are fighting with their subordinates, it will cause an employee to leave his or an organization. We also have where the wages or the incentives given to the employees are not enough or is not enticing, and an employee gets a better option, he or she may leave the organization for another job. And then transfer. If I get married and my husband is in a different town, definitely I may have to transfer and go to a different town. So these two can lead to an employee leaving his workplace to a different place. And once the person leaves the organization, we may have to replace the person. So that is labor turnover. Labor turnover, it is the rate at which employees leave an organization and they are being replaced. The next one is short notes on the following. Write short notes on the following. We have statutory deduction, payroll voucher, social security fund, pay slip, and then taxable earnings. We take them one after the other. Statutory deductions is a type of deduction that is backed by law. We cannot run away from that. No matter what, you have to pay tax. The more you earn, the more tax you pay. So statutory deduction is backed by law. Government have asked that every citizen have to pay tax, and that is a statutory deduction. We have payroll voucher. As I explained earlier, payroll voucher is a list of all employees in an organization indicating their basic pay, allowances, bonuses, gross pay, all deductions, and their net pay. That is the amount of money they take home at the end of the period. Then we have the Social Security Fund. The SSF is also a statutory deduction. The statutory deduction, we have income tax and then the Social Security Fund. The Social Security Fund is deducted or is being paid by the employee himself to SNET, so that when you retire, you be the person to benefit from it. Then we have the pay slip. The pay slip is extracted from the payroll voucher, which is given to an employee at the end of the period, indicating all the earnings that is due to that employee. Then we have the taxable earnings. The taxable earnings is the part of your income that is subject to tax. The taxable earning is the part of your income that is taxable to tax. So we may have a gross pay, but the whole gross pay is not subject to tax. We need to take all non-taxable items from it so that we can charge tax. So taxable earnings is the part of your income that is subject to tax. Okay. All right, so we look at the calculation here, which is just WASI May 2006. So I will leave this with you while you practice that at home. Calculation of bonus. Details for 3 employees are as follows. We have Charles, Dave, and Elliot. Time allowed in hours has been given. We have the basic wage rate per hour and then the time taken. So the instruction is in a payment by results scheme. Employees are paid a bonus on hours saved as the basic wage rate. The bonus hours gained are calculated on the hours saved multiplied by the ratio of time saved to time allowed. Payment is made in full for total units produced. The bonus hours gained are calculated on the hours saved multiplied by the ratio of time saved to time allowed. Payment is made in full for total units produced. So that is the detail of the question. We have 3 employees, the time allowed in hours, the times taken, and the basic wage rate per hour. You are required to calculate for each employee the bonus hours and bonus earned, and then the gross wages earned. I will leave this question for you as you practice it at home. Until then, we will bring today's revision session to a close. I have been your facilitator, and my name is Madam Julie. Enjoy your evening.